Hello everyone, welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of Chapter 6 from the book How to Swing Trade by Brian Perzim. It has been created with the help of AI. The chapter is titled Fundamental Analysis. You can read the original post at samfury.com.
All right. Hey, everyone. Welcome back. For this deep dive, we're tackling Chapter 6 from How to Swing Trade.
Yeah, fundamental analysis.
That's right. Fundamental analysis.
Yeah.
Getting down to the nitty-gritty.
The core.
The core of how to understand a company's true value.
Exactly. And, we're going to be focusing this specifically for swing traders.
Perfect.
So cutting through some of the noise that, a long-term investor might worry about.
Love it. So let's start with probably the most important thing, right? Revenue?
Absolutely. This is the lifeblood of the company, how much money they're bringing in through sales.
Right. So it's not even profit yet. It's just
the top line.
That's a good way to put it.
And, we want to see year-over-year growth, steady, not declining. That could signal a problem.
Yeah, that's definitely a red flag.
This is like the overall health.
Right. And especially for swing traders, we're looking for that momentum.
Yeah, you want to be riding the wave of a company on the upswing.
Exactly. Okay, so we've looked at revenue. Now let's talk about earnings per share.
Yes, earnings per share. Now, this is how much of that revenue is actually turned into profit for each share of stock.
Okay, so that's the distinction here. Revenue versus earnings.
It's important.
Okay.
Yeah, so think about it this way.
Okay.
You and a friend each invest in a lemonade stand, and at the end of the day, there's $10 profit.
All right, so that would be like the revenue, right?
Yeah, $10 revenue, $10 profit.
$10 profit, okay.
Earnings per share tells you how much of that profit each of you gets based on how many shares you own.
Oh, I see. Okay, so obviously the higher the earnings per share, the better.
The more lemonade money you get.
Yeah, exactly.
Mm-hmm.
Give me an example, though, of maybe where earnings per share might be misleading.
Okay, so let's say a company manipulates its earnings to look good in the short term.
Okay, how would they do that?
Well, they could cut essential expenses or delay investments to boost their EPS.
Oh, so it looks better than it actually is.
Yeah, it might look appealing to a swing trader focused on, those shorter term swings.
Right.
But it could lead to some bad news down the road.
So you have to understand the context behind the numbers.
Exactly, yeah. So next up, we've got the king of fundamental indicators, the price to earnings ratio.
Oh yeah, this is the one that everyone throws around.
Yeah, it's
what does it really tell us?
It's all about how the market values a company compared to its earnings.
Okay.
So imagine two companies both selling for $50 a share.
Okay.
Company A earns $5 per share.
Okay.
Company B earns $2.50.
So company A is making twice as much, right?
Exactly. And so
per share.
Per share.
Per share, yeah.
So company A would have a PE ratio of 10.
Okay.
Company B would have a PE ratio of 20.
I see.
So investors are willing to pay twice as much for each dollar of earnings from company B.
Interesting. So that doesn't necessarily mean that company B is doing better. It just means that they have higher expectations for future earnings.
Exactly.
Interesting.
Yeah, and so, for swing traders, this can be interesting because sometimes a high PE ratio can mean a stock is overvalued.
Ooh.
And if the company fails to meet those expectations...
Oh, then you might see a dip.
Exactly. Then you might see a correction.
Interesting. Okay, so PE ratio, good to be aware of that, especially for swing traders. Now, every company needs money to operate, right? So how do they get it?
Well, there's two main sources, debt and equity.
Okay.
Debt is basically taking out a loan.
Borrowing money?
Borrowing money.
Okay.
Equity is where they sell ownership shares of the company to raise money.
Got it. So it's a balancing act between the two.
Yeah, and to assess that balance, we look at the debt to equity ratio.
Okay.
This tells us how much debt a company is using compared to its equity. And a low ratio generally suggests a healthier situation.
Okay. And for swing traders, why would we care about that?
Well, because a company drowning in debt might be more vulnerable to economic shocks, to interest rate hikes.
Right, yeah.
So that could create some volatility.
Yeah, maybe not the kind that we're looking for.
Exactly. So it's just something to be aware of.
Okay, debt to equity ratio. I like it. Now let's talk about return on equity.
ROE, yes.
ROE. So this is essentially how we as investors know if our money is actually being put to good work.
Exactly. So this measures how efficiently a company is using its shareholder investments to generate profit.
Okay.
And it's expressed as a percentage, so a higher ROE generally means a company's doing a better job at making money for its shareholders.
Okay, so higher the better.
Higher the better.
Got it.
And if it's growing, even better.
Okay, so we want to see that upward trend. How does this apply, though, to swing trading? Why do swing traders care about ROE?
Well, if a company has a steadily increasing ROE, this suggests they're not only profitable, but they're getting better at it.
Oh, okay.
And that's, a good sign. It tends to attract investors, drives up the demand for stock, and creates those upward price swings.
Oh, I see. So it's not just about the number itself, but about the trend.
The trend is your friend.
Trend is our friend.
And, that's what you want to be looking for. So we've got this great thing, but there's another side to the coin. Short interest.
Oh, yeah. Short interest. What's that all about?
So some traders believe that a certain stock is overvalued.
Okay.
And they bet against it.
They're betting against it.
By shorting it.
Yeah.
They borrow shares, sell them immediately, and then hope to buy them back later at a lower price.
So the short interest is basically how much betting against a stock is happening.
Exactly. It's a gauge of negative sentiment.
Oh, I see.
Now, a high short interest can actually be a signal for savvy swing traders.
How
So
savvy.
imagine a heavily shorted stock starts to rise unexpectedly.
Okay.
So all those people that bet against it,
Yeah.
they're now facing potential losses.
Yeah.
So to cut their losses, they're going to buy back those shares to cover their position.
So it drives the price up even more.
Exact.
Interesting. So it can actually be a buying signal.
It can be a buying signal, but of course, you got to look at the bigger picture.
Right.
High short interest alone is not a guarantee.
Right. Always look at the bigger picture. Combine it with other things.
Yeah.
Now, here's something that I think is really exciting. You kind of touched on it earlier. These hot sector manias.
Oh, yeah. Those are fun.
So this is when, like, an entire industry kind of goes crazy. Everyone's talking about it.
The dot-com boom.
Exact.
The rise of Bitcoin.
Yeah.
So, huge potential for gains.
Yeah.
But also
that's right.
very risky. You can get caught up in the hype.
So how do we, as swing traders, how do we sort of identify those? What are we looking for?
So one of the things is, a surge in media coverage. When it starts dominating the headlines, it's a good indication that interest is growing.
Right.
Another thing is just like a significant increase in the stock prices in that sector.
Okay. So are there any other, I guess, signals that we should be aware of?
Well, remember, if everyone's talking about it, it might be too late.
Oh, okay. So you really got to be ahead of the curve on these.
Ahead of the curve, doing your research, staying informed.
Okay, great advice. So we've covered a lot of ground here, but now I want to actually get into how we can use all of this to make some actual swing trades.
All right, so let's start by revisiting revenue growth. If a company's consistently, increasing its revenue year over year,
Right.
It's a good indicator that they're gaining market share, expanding their customer base,
Yeah.
maybe even launching new products.
Yeah.
This positive momentum often translates into an upward price movement in the stock.
Okay, so that's a good thing. That's something we're looking for.
That's what we want.
Yeah, okay. But what about earnings per share? I feel like that's even more important because revenue doesn't equal profit.
You're absolutely right. Revenue does not equal profit.
Yeah.
Remember our lemonade stand analogy.
Yeah.
Earnings per share tells us how much of that revenue is actually turned into profit for each share.
Right.
You want to see that EPS growing,
Okay.
ideally at a steady pace.
Okay, so those two things are important. But how do we actually use that information to actually make a trading decision?
All right, so let's say you've identified a company, we'll call it green tech,
Okay.
and they're in the renewable energy sector.
Okay, green, yeah.
They're showing impressive revenue growth, and their earnings per share is consistently increasing.
So they're checking all the boxes.
They're looking good.
Yeah.
Now, this is where we layer in the PE ratio.
Okay.
It tells us how the market is valuing that growth.
Right. So like a high PE ratio could mean it's already priced for perfection, and a low one might mean it's an undervalued opportunity.
That's right.
But how does that actually help us decide when to buy or sell green tech?
Okay, so now this is where we start bridging fundamental analysis with technical analysis.
Right. Okay.
So we use charts and patterns to pinpoint optimal entry and exit points.
Okay.
So let's say green tech has been, trading sideways for a while,
Okay.
but then boom, the price breaks above a previous resistance level with strong volume.
Ooh, breakout.
Breakout. That's what we're looking for.
That's the signal.
A lot of times that signals a buying opportunity.
Okay. Okay.
And, the fundamentals remain solid.
So it's kind of like a confirmation The market is agreeing with what our fundamental analysis is telling us.
Exactly.
Okay, I like that. But what about selling? When do we know when to get out?
That's just as important. Breakdowns where a stock's price falls below a key support level
Okay.
can be a signal to sell.
Yeah.
It suggests selling pressure is building, and the stock might be heading lower.
Okay, so you got to know when to jump off before the wave crashes.
It's not just about riding the wave up, it's about knowing when to jump off before it crashes down.
Okay, that's great advice. So we've talked about revenue growth, earnings per share, PE ratio. What about debt to equity ratio? Does that play into our, swing trading strategy?
Oh, yeah, absolutely. So let's stick with renewable energy.
Okay, so green tech.
Green tech, yeah. Imagine they have a very high debt to equity ratio compared to its competitors.
Okay.
Now, this could make them more vulnerable
Cool.
to interest rate hikes,
Yeah.
economic slowdowns,
Right.
which often hit growth sectors harder.
So even though they look really good, on the surface, that could be kind of a red flag.
Could be a red flag, yeah.
Okay, so we really got to be, paying attention to the whole picture.
Absolutely. You're not just looking for companies with growth potential. You're also looking for companies that can survive.
Okay, so debt to equity ratio, another good tool in our toolkit. Now, we've been talking about green tech, which is a renewable energy company.
Yeah.
How would we approach a different sector, like let's say consumer goods?
Yeah, that's a great point. So in consumer goods, brand recognition, market share,
Okay.
pricing power are key.
Pricing power. Okay.
Think about those iconic brands that have been around for decades.
Yeah.
They've got loyal customer base, wide distribution network,
Yeah.
and they're often able to raise prices without losing a lot of customers.
Okay.
So, you're looking for those established companies, strong brand loyalty, track record of consistent performance.
Okay. So less about explosive growth and more about reliability.
Yeah, more about stability.
Got it.
But you still need to look into their financials.
Oh, yeah.
Are they growing, even if it's at a slower pace?
Right.
Are they managing their debt well? Are they returning value to shareholders?
Okay.
These factors can all influence a stock's price movement.
So even with those kind of, safe consumer goods giants,
Yeah.
you still got to do your homework.
Always got to do your homework.
Never take anything for granted.
Yeah.
Okay. What about those times when it seems like the fundamental analysis that we do maybe disagrees with the market?
That's where things get interesting.
Yeah. How do we deal with that?
So let's say, you've identified a company, Retail Co.
Okay. Retail cow.
Solid fundamentals, strong revenue growth, low debt, the whole package.
The whole 9 yards.
But their stock price has been declining for weeks.
Oh.
It's seemingly ignoring all those positive signs.
Well,
What's going on there?
So the market's not really valuing them at what we think they're worth.
Yeah, so sometimes there are factors outside a company's control that can influence the stock price.
Right.
Maybe some negative news about the retail sector overall.
Okay.
Maybe investors are worried about a recession.
So it's sort of like a battle between like the company's intrinsic value and what the market thinks about it.
You got it. And as swing traders, we need to be aware of this.
Yeah, for sure.
And that's why technical analysis is so important.
Right.
Charts can reveal patterns and trends that suggest whether that market sentiment is shifting.
So we might see, like, even though, the market sentiment is negative,
Yeah.
we might see a bullish reversal forming on their charts.
You might.
Okay.
And that could be a signal that, hey, this is a buying opportunity.
Yeah, contrarian play.
Contrarian play. Now, this is where risk tolerance comes into play.
Oh, okay.
Are you comfortable going against the grain,
Yeah, that's a good point.
trusting your analysis?
Okay.
Remember, though, no strategy is foolproof.
Right.
There will be times when you're wrong,
Yeah.
and the market doesn't behave the way you expected.
Right. So you always got to have an exit
You
strategy.
always have an exit strategy.
Yeah. Okay, that's good advice.
Now it's about, putting those tools to work.
Yeah, putting it all together, making those smarter decisions.
Let's say you've been following a company, we'll call it Innovate Co.
Innovate go.
All right. They develop a cutting-edge AI software.
Oh, okay. So definitely a growth sector, potentially.
Exactly. Now, they're showing all those strong fundamentals that we've talked about.
Okay, so they're checking all the boxes.
They're checking the boxes. Revenue's growing, earnings per share up, debt to equity ratio is healthy.
Sounds like a winner. But how do we actually use that information to time our trades to, maximize our profit.
That's where, the technical analysis comes in.
Okay.
We combine those fundamental insights with chart patterns and indicators to pinpoint those entry and exit points.
So it's like a 1-2 punch.
Yeah.
Fundamentals are telling us what to look for, and the technical analysis is telling us when to actually pull the trigger.
When to pull the trigger, exactly. Yeah. So, let's say InnovateCom's stock has been consolidating,
All right.
trading within a range, and then it breaks out above that range with strong volume.
Oh, that's what we like.
Breakout, baby.
Confirmation.
The market's catching on to the potential. And because you've already done that fundamental homework.
Right. We're not just blindly following charts.
You've got that confidence.
We have that deep knowledge that's backing it up.
You're not just chasing a pattern.
Okay, I like it. Now, what about those times when it seems like the stock is kind of defying the fundamentals? We talked about that.
We did.
Market sentiment being different.
Yeah.
So how do we approach that?
Let's say you found a company, value retail.
Okay.
Rock solid fundamentals. Profitable, minimal debt, even paying dividends.
The whole package, but
their stock price is lagging. It's ignoring those positive signs.
So it's almost like the hidden gem.
Yeah, maybe the market hasn't caught on yet.
Yeah, hasn't quite figured it out yet.
Maybe there's some negativity surrounding the sector overall, or
right.
Investors are just, spooked by the economy.
Yeah, they're overlooking it.
They're overlooking it.
But for us, as swing traders, that could be an opportunity.
It could be. Now, it's risky.
Yeah, it's got to be right.
But again, it's about calculated risk. And this is where, technical analysis helps us.
Okay.
We can look for those bullish reversal patterns, even in a bearish market.
Okay, so we might see a double bottom or, some kind of divergence in the RSI.
Yeah, those are all signals that selling pressure is weakening.
Okay.
Rebound could be on the horizon.
And because we've already done that fundamental analysis, we know that the company's actually, strong.
You've got that conviction.
We have that conviction. We're not just, guessing.
And that's how you find those gems that the market has overlooked.
Love it. Okay. So we're really combining the best of both worlds here.
Gotta have both.
The fundamentals and the technicals.
It's a continuous learning process, though.
Oh, for sure.
Every trade is a chance to refine your approach.
All right. Well, this has been incredible.
It has been fun.
We have demystified fundamental analysis. We've learned how to apply it, how to combine it with technical analysis. It's been a journey.
I think we gave everybody a lot to think about.
So for all of our listeners out there, I hope you've enjoyed this deep dive. Now it's your turn. Go out there, do your research, find those opportunities, and as always,
happy trading.
Happy trading.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries. You can also get any of Sam's books and other exclusive content. It's all completely free at samfury.com.